So what we're going to do is I'm going to bring over this checklist here. So this is the checklist that I use when I set up anybody's QBO file for the first time. You set up the sales tax and the meals rate, and then you do these under the advanced settings. I'm going to show all of this in this video, but down below there's a jump to list. So feel free just to jump to the things that you want to know how to do. So first of all, it says set up the GST HST. So we're going to go to taxes, sales tax, set up sales tax, and my case studies in Ontario, save. And we're just going to say it's quarterly for now. We can change that at any time. You don't have to put a GST number in, but the case study has one down here. So I'm just going to highlight that. That's the case study's business number, like this. Next. And that's it. That's really kind of all you have to do. It's pretty easy. There's the HST setup. Now, you can only claim 50% of the meals expense when it comes to tax time, but what happens is you put in all of the meals expense, and when you prepare the taxes, that's when you take the total and divide it by 2, because it's for tax purposes that you're dividing by 2, but it's still sort of an expense of the business. But in the same sort of way, you can only claim half of the HST on the meals, and to have QuickBooks track that for you makes things much, much easier. So let's go ahead, manage sales tax, and we're going to go to add custom rate. So what we're going to do first is this is going to be the half of the HST that you can claim. So we're going to call this half meals claimable, like this. And we're going to say I paid on purchases. So what's 13 divided by 2? It is 6.5, like that. And the GST HST collected is actually a liability account, so we're going to put it towards the liability account because this is the claimable half. And we're going to add it just to the input tax credits line, just at 6.5%, not at 13%. That's what makes it different. But you can't just use this. We've got to create, like it's going to be, you'll see, because we can't, if you take 113 and you back out 6.5, you're not going to get 100, right? This is only half of the work here. So we're going to claim half of the ITC. We're going to click add. We're going to add another custom rate. And this time it's going to be the half meals non-claimable. And we pay it on the purchases, and it's also 6.5%. So it's the other bit of that 13. And we're going to say non-tracking. If you say expense, it's going to put it to an expense account called HST expense, which is meaningless. Like, you know, what's going in there what's HST expense? Like, is it related to the meals expense? Is it related to what else are you not claiming? So I like to say non-tracking. When you say non-tracking, it's going to take the 6.5 that's not claimable, and it's going to put it back to whatever you're putting it on. So for example, if you're using this for meals, it's going to put 6.5% of that sales tax back into the meals expense GL account. So that's what non-tracking is. Perfect. We're going to hit add. We're not done yet. Now we're going to add a new tax, and it's going to be combining these two into a group. So this is going to be meals HST, like that. And the first tax rate is going to be the claimable part, and the next part is going to be the non-claimable part, and it's going to be claimable on the net amount. So the $100, if it's $100, if you did it like this, because some taxes are like this, it would do it on the $106.50, but we're going to do it just based on the 100. We're going to go add, and we're almost done. We're almost done because right now in the drop down of an expense, you will have meals HST as an option, half meals, HST exempt and 0 rated, but we only want to show the meals. So in order to hide these two, we can actually make these inactive. So now they're not listed and only this main one is going to be listed. So now we are done. We've added that, and let's go see what it looks like in action. So we're going to go expense. And I'm just going to say 100 here with the HST meals right there. You can see when we drop down, we don't have those other two non-claimable ones because I made them inactive. If I didn't make them inactive, they'd just show. And even though it says GST 650, 650 both times, if I go ahead, oh, I have to put meals here, sorry. Meals, there we go. And then HST again. And if I hit save right now I can go to more transaction journal. So what is QuickBooks actually doing in the background with this? And what you can see happening is that the bank or whatever bank we hit is the 113. Meals is 100. GST credits is 650, and it takes the other 650 and puts it in the same bucket. So it's only claiming half of the HST. And if we go back to taxes and we sort of look at the summary, let's just say all dates for now. You can see here's that 650 that's being claimed in the input tax credits. So in the list, you'll see only half of it's being claimed on the 100 like that. So that is a useful way to only claim half of the HST and track it, and no more work or adjustments have to be done on the meals HST ever again. We're done. So moving down the checklist, there's some settings in QBO that I change every time I set up a new QBO account. QBO defaults to day, month, year. I am more comfortable seeing things in month, day, year. So I'm going to go ahead and change that. I also find that letting me know when I put a bill number in twice, I find very helpful. And I find very unhelpful automatically apply the credits and the bill payments, because I want them applied the way I want them to. A lot of times when I'm helping new QBO users, like, I don't understand why this is entered this way. I never did it. It's spooky. It's spooky because QuickBooks automatically does things, and we don't want them to automatically do that. We want to have control over that. So let's go ahead and show you where that is in the advanced settings. It's up here. We're going to go to accounts and settings. We're going to go down to advanced, and this is where we're going to, first of all, change to month, day, year, and we're going to add warn me if there's a duplicate bill number, and I'm going to hit save. And then the other thing I change is up here, the automatic stuff. Don't automatically apply credits, don't automatically apply bill payments, save. So now we're getting rid of some of that spooky stuff that QuickBooks does without our permission. And that's quick and easy, but honestly saves so much time and energy. Now we're going to move on to the last two things here, which is importing the general ledger accounts and importing the vendor names. You don't have to import the vendor names. You can add them on the fly. This just makes a little less typing work for you. And then also, same with GL accounts. QuickBooks does have a standard set of GL accounts, but I do have some GL accounts that I do like to have in the case study. So let's go ahead and first of all, let's import the GL accounts. So next what I'm going to do is I'm going to import the chart of accounts that I'd like to use for this Grand Gate Gardens case study. There are some that are new, there are some that I'd like to rename, and there's some that I would like to delete. So I'm working right now with this Excel file that I created. And this third tab is the full account list. This is the ones that hopefully we'll end up having for the case study, and the notes of whether we're keeping or changing or making new ones. This middle tab here, this is the GL accounts in QBO that I'm going to change, and I'll sort of chat why I'm changing them as I do them, and then these are the ones that I'm going to delete. And this is the actual list of the new ones that we can import directly into QuickBooks. So first of all, I'm going to bring this over and I'm going to look at my delete and change. And if you're following along, you probably have this file as well, so you can have that up. So let's go over to the transactions, and that's where chart of accounts is. And I'm just going to pull up insurance. And you can see there's 3 insurances. I'm going to delete the disability and the liability. With the batch actions, I can just say make inactive, make inactive. And then with this last insurance one, I'm going to edit it. And I'm going to say commercial insurance. And insurance has so many different applications and tax implications that it's important to specify what the insurance is. So when we import, we're also going to import auto insurance as one of the new ones. And that's important because if this is a sole prop and it's a personal car, then there's going to be some prorating on the auto insurance. Or maybe you want to see what the cost of your auto insurance is compared to your commercial insurance. But more as a tax implication is the prorating, of course, of the auto insurance. And then there's just some certain life insurances that aren't claimable for tax purposes and some that are. So it's important to denote what the insurance is. It's a bit annoying that QBO doesn't separate them out, but because I feel like there's tax implications. So that's why we're changing this one. So next I'm going to do the freight and delivery costs. And I'm going to delete freight and delivery or make that one inactive. Yes, make inactive. So this one, what we're going to use it for in the case study is just if a customer buys something online and the business needs to ship that out to them, that is a cost that is incurred because somebody bought something. It's to do with producing the product or the service. So that's why this is more of a direct cost as opposed to an overhead expense. But that's not very clear in the name. And also I like the word COGS, not costs. So what we're going to do is we're going to actually change this to be more clear. And I'm going to call it shipping out COGS, like this. So now shipping out is very specific and, gives more guidance, I think, to new users. So next we're going to do penalties and settlements. I'm going to make this one specific only to CRA. Let's see if we can go. So CRA, interest, and penalties. Now, I'm not sure right now about the tax implications of settlements, but if you're paying penalties to somebody other than CRA, that's probably like a type of bank charge that is claimable. But specifically, CRA interest and penalties is not a claimable item from a tax perspective, even though we still need to see it and track it from a business perspective. That's why it's separated out as an other expense, and that's why it's important to have a GL account specifically for CRA interest and penalties if they're incurred. So we're going to save that one. Now, the next one that I'm going to change is the purchases. Now, the reason I'm changing purchases is because in our case study, there's two different types of purchases. There's going to be purchases of job materials, and there's going to be purchases like for installations, and then there's going to be purchases like retail for stocking the store. And I think it's important to have a distinction between those two types. So this one is the one that I'm going to change to the retail purchases and then retail for the gift shop. And I don't say costs, I say COGS, cost of goods sold, as opposed to just cost of sold. Other costs of service. Oh, I see. I wondered what cost was until just this moment. Anyway, I say COGS. So we're going to go save. And then the next one, rent or lease payments. Now, the reason I don't like this one is that rent or lease payments, I think I understand that they're looking for rent or lease of buildings, but you don't see that detail when you go to put stuff in. And a lot of times I see sometimes people putting equipment leases into rent or lease payments because they are rent or lease payments. So they are, though, different than rental of the property. So I'm going to edit this so that it just says rent expense. All right, save. And then two more to change. Repair and maintenance is another one I feel is just way too generic. So again, as I was saying before, there it is. So as I was saying before, if you're doing repair and maintenance on your car, but you're a sole prop and that's got some personal use in there, you're going to want to prorate that out. Also, if you're analyzing the like when I say prorate, I mean only claim the portion that's related to business based on your driving history. We can talk about that another day, but that's why it's important to separate out. And that's also why it's important to separate out the auto repair and maintenance. Now, even if you're not self-employed, it's still very useful to separate out repair and maintenance into, I would say, 3 different categories. You've got the auto repair and maintenance, you've got your property repair and maintenance, and you've got equipment repair and maintenance. Then you're going to be able to make much better informed decisions over Why is my maintenance costing so much? Oh, look at that. That was snow removal in the winter. Oh, look, that machine is getting really old. Maybe we should replace it. So I think it's important to have, like, repair and maintenance just feels so big and vague to me. So let's go ahead and edit this one. And we're going to say that this is actually equipment. And we'll add the other two. Save. And then the last one is tools. Now, the reason I'm changing this one, there's two different types of tool accounts, okay? You want to have your equipment asset account on the balance sheet. So this is for any equipment that's going to last longer than a year and that costs more than $500. And so it's something that you have, right? It's on your balance sheet. It's going to decrease in value, but it has worth right now. But when it comes to small tools, things that are less than 500, those are things that you want to see on your profit and loss. And those are things that you can claim as expense against your taxable profit right away as well. And so when just the word tools, I find with junior or learning bookkeepers is that they see tools. Oh, yes, this like $3,000 generator is a tool, right? And they'll put it in there. Now it's in the expenses instead of on the balance sheet. So I think it's important to rename this one to be very specific. Small tools and equipment. So small equipment as well. Equipment expense. And I say the word expense so people know we're also going to have like a larger equipment fixed asset account as well. But I think it's helpful to specify this is for small stuff that's expense. All right, now moving on, let's go ahead and delete these ones. They are in alphabetical order. I've deleted a couple already, or shall I say made inactive. So we're just gonna, actually, these are in alphabetical order here. You can change that if that's not the case by clicking on the name, and the arrow up means alphabetical. And I'm just gonna go down the list and click them. Billable expense income. Get rid of that one. Commissions and fees, cost of labor, we'll be using wages, freight and delivery, let's see, B, C, D, E, F. Oh, we deleted that, right, sorry, insurance, disability and liability deleted, job materials. Materials is usually cost of goods sold, and this is the type that supplies, I guess, like screws, but I don't know, I'm having a different purchases account for those that I'm making. Miscellaneous, not very helpful. Other costs, not very helpful. Other general and administrative expenses, I don't find that helpful. Other ordinary income, portfolio income. Promotional, I guess you could have marketing, but we're going to have advertising that's already in there. Let's see, refunds and allowances. And then we're going to make very specific sales accounts so we can get rid of these ones. I don't know why QBO gave me 2 today. Shipping and delivery expense. I'm going to keep the shipping and delivery income though. Stationery and printing, that's office supplies or office expense in my opinion. Subcontractors. This file doesn't have subcontractors. And you can see they've got 2 expenses or cost of goods sold. So I'm not quite sure which one we'll end up using when we do get contractors. So we'll cross that bridge when we get to it. Let's see, travel meals. We have meals already, and travel meals are one of the types of meals that's like allowed to be put in here. And we'll talk about meals another time as well. And then uncategorized income 1. I wonder if it's going to let us delete some of these. This is sort of my first time filming this. So let's go to batch actions and see. We'll make inactive. Yes. 1. I don't know which one. Services. Oh, so they've set up a product or service that uses services. That's fine. We can get rid of that when we fix up the sales items when we go to create the invoices. Okay, so the next thing that we're going to do, so this file right here, it's the first tab is new to import into QBO. And because it's on the first tab, this should be all the things that QBO needs to import those ones in. So let's go ahead and I'm going to have to close it, I believe. Save. So we drop this down. We can say import, and I have to browse for it. All right, and look, there's a Google Sheet thing now. Cool. So maybe I'll make this available in a Google Sheet too. But right now we're going to go next. And it's doing the mapping, and we're not doing account numbers for this case study. So that's okay. We're going to go next, and we're going to now import these over, and I'm just going to hit import and see what happens. And 34 of 34 accounts successfully imported. Excellent. So that's now the chart of accounts set up and ready for our Grand Gate Gardens case study. Next one is optional, just you don't have to keep adding new vendors each time. They're going to be already there. So if we just put them all in at once. So we're going to go to expenses, suppliers, and we're going to say import suppliers, and we're going to browse and get this. There it is. We're going to say next. And I'm just putting in the name, not adding anything else, just to make it quicker to do the case study. Next, import. And we're done. So that was quick and easy. So the next thing that I'm going to show is how to upload that bank feed. So in the case study, we don't have like an actual real life bank to connect to. It is useful, even though it can be a bit dangerous at times. So to upload the bank feed, we're going to go to bank transactions right here. It's also up here. Right now, because there's nothing connected, this is why it's giving me these options. I'm going, because I don't have a real bank account to connect to right now, I'm going to upload the transactions. And you're going to be able to find that in bank feeds right here. So these are the bank feeds that we want to upload. I'm going to bring over, this is the Canada bank feed, continue. And so I have to say this is Canada Bank, like that, which we just uploaded these GL accounts. That's why it exists already. So we're going to go continue and done. So now the sample company is now set up and ready to use in the case study.